Mark Cuban, the billionaire entrepreneur, investor, and owner of the Dallas Mavericks, is widely known for his no-nonsense approach to business and investing. Whether it's his successful ventures in tech, media, or sports, Cuban has built an empire through strategic investments and a keen eye for opportunity. But how exactly did Mark Cuban build his fortune? What principles guide his investment decisions? In this video, we'll reveal Mark Cuban's top 5 investment tips for aspiring entrepreneurs. These lessons have helped Cuban become one of the richest self-made billionaires in the world, and they can help you make smarter investment decisions and grow your wealth. Let's dive in. Invest in what you understand. Mark Cuban is a firm believer in the principle, don't invest in things you don't understand. One of the core reasons for his success is that he only invests in industries or companies where he has expertise and a deep understanding. Whether it's technology, sports, or media, Cuban knows the ins and outs of the markets he's in. For example, before selling his company Broadcast.com to Yahoo for $5.7 billion in 1999, Cuban had spent years immersing himself in the technology and media industries. His understanding of the market dynamics and the potential of streaming technology allowed him to make a game-changing deal that transformed his financial future. The takeaway: focus on industries or businesses you understand well. If you can grasp the market's needs, potential growth, and risks, you're in a better position to make informed, confident investment decisions. Knowledge is your biggest advantage. Look for businesses with scalable models. Mark Cuban often emphasizes the importance of scalability when it comes to investments. Scalability is the ability of a business to grow without being hampered by its structure or available resources when facing increased production demands. Cuban loves businesses that have low overhead and can scale quickly. For example, when Cuban invested in companies like 1031 Productions, a Halloween-themed entertainment company, he saw the potential for the business to grow rapidly without requiring massive infrastructure changes. He knew that scalability would allow the company to expand quickly, increasing its value and his return on investment. The takeaway: look for businesses with scalable models, particularly those that can expand quickly with minimal costs. If you're investing in a startup, ask yourself, can this company grow exponentially? Can it reach a broad customer base without a massive increase in operational costs? Don't follow the crowd. Be a contrarian investor. Mark Cuban is known for being a contrarian investor, someone who deliberately goes against the prevailing sentiment in the market. While most people follow trends and make decisions based on what's popular, Cuban believes that the best opportunities often arise from going against the grain. In fact, Cuban has stated that his success has often come from investing in things that others considered risky or undervalued. For example, when Cuban first entered the tech industry in the 1990s, many investors were still skeptical about the potential of the internet and digital media. While the mainstream was focused on traditional businesses and industries that seemed safer, Cuban saw the internet's potential to revolutionize how people interacted with media, leading him to create Broadcast.com. It was a visionary investment that others didn't fully understand at the time, and it paid off handsomely when Yahoo acquired the company for $5.7 billion in 1999. Cuban's approach is to identify markets or innovative ideas that may be underappreciated or misunderstood. When everyone is jumping on the same bandwagon, that's often the time to step back and assess whether it's the right move. If everyone is jumping in, the opportunity may have already been priced in or become oversaturated. Being a contrarian doesn't mean always opposing the market, but rather looking for opportunities where others aren't paying attention. It's about being patient, doing the necessary research, and having the courage to make decisions based on your own knowledge and vision, rather than following the crowd. Key takeaway: think independently. Don't just follow the latest trends or popular opinions. Look for undervalued assets or emerging industries that others might be overlooking. Invest in what others are afraid to, but always with a solid understanding of the risks and potential rewards. Don't invest in things you can't afford to lose. Mark Cuban's approach to risk management is simple but powerful. Don't invest money you can't afford to lose. This advice is particularly relevant in the world of investing, where market conditions can change quickly and unpredictably. Cuban has consistently emphasized that while risk is inherent in any investment, it's important to manage your exposure and never gamble with money that could disrupt your financial security. In his early career, Cuban faced numerous opportunities to invest in high-risk ventures, and he wasn't shy about making bold moves. However, he always made sure that these investments were well within his capacity to absorb a loss, both financially and emotionally. For instance, when Cuban first bought the Dallas Mavericks, he didn't bankrupt himself to acquire the team. He ensured that the investment fit within his broader portfolio, with room to grow without jeopardizing his other assets. This principle also applies to entrepreneurs and startups. Cuban often advises young business owners to avoid putting all their personal savings or assets into a single business venture. Many entrepreneurs fall into the trap of pouring all their money into a new idea because they're emotionally attached to it. But this is a risky approach. Cuban suggests keeping a safety net so that in case things don't go according to plan, you can recover and move forward without compromising your long-term financial stability. Key takeaway: be responsible with your investments. Don't take risks that could financially cripple you. It's important to stay within your risk tolerance and make investments that won't put you in a position where you're betting everything on a single opportunity. Financial success is built over time, and that's only possible if you manage your risks effectively. Be patient. Wealth is built over time. One of the most consistent themes in Cuban's approach to investing is patience. He often talks about how his wealth was not built overnight, and that it's essential for investors to take a long-term view of their portfolios. Cuban is not the type to make quick, emotional decisions based on short-term market movements. Instead, he focuses on building wealth through strategic investments that take time to grow and compound. Take, for example, his investment in Amazon. Cuban made a relatively small investment in the early days of Amazon, well before the company was the powerhouse it is today. He didn't expect instant returns. Instead, he saw Amazon's potential to change the retail industry, and he was willing to hold on for the long haul. As Amazon grew, so did the value of his investment. Cuban also warns against chasing after get-rich-quick schemes. He believes that true wealth isn't created by short-term speculation or by trying to time the market. It's created by finding the right investments, sticking with them, and allowing them to appreciate over time. In fact, Cuban has said, "I'm a big believer in compounding," and he urges investors to be patient and let their investments mature. Many successful investors, including Warren Buffett and Charlie Munger, have also talked about how compounding works best over the long term. The earlier you start, the more your investments can grow over time. It's easy to get caught up in the hustle and excitement of quick returns, but Cuban's approach teaches us that building real wealth is a marathon, not a sprint. You have to make informed decisions, give your investments time to grow, and avoid reacting impulsively to short-term fluctuations in the market. Key takeaway: wealth is built slowly and requires patience. Focus on the long term and resist the urge to make snap decisions based on short-term market conditions. The most successful investors understand that compounding takes time, and they're willing to give their investments the time and space they need to grow. Mark Cuban's top 5 investment tips: invest in what you understand, look for scalable businesses, be a contrarian investor, don't invest more than you can afford to lose, and be patient, have been integral to his success as an entrepreneur and investor. By following these principles, you can make smarter investment decisions and set yourself up for long-term financial growth. If you found these tips valuable, make sure to like, subscribe, and hit the bell icon to get notified about more investment and entrepreneurship content. Drop a comment below with which tip you found most useful, and share any investment strategies that have worked for you. Thanks for watching, and I'll see you in the next video.